Okay, good afternoon, everyone. Welcome back. Am I audible? Let me know if I'm audible. Let's start the discussion if I'm audible. Okay, again, am I audible to you people? Okay, yes. Thanks a lot. Let's start. So far what we have discussed, we started with GST, goods and services tax. In the goods and services tax, what we have discussed, right? Why did we introduce GST? What are the features related to GST? And within the features, one of the very important features was we are following a dual structure of GST. And within the structure of GST, we have multiple slabs or multiple tiers of GST. For example, we have 5%, 5%, 12%, 18%, and 28%. These are different rates of GST which is applicable. Done. So let's try and understand why did Government of India use multiple tiers, multiple rates of GST. What was the objective? We could have simply gone for only one rate as such, right? Why did we go for multiple tier structure like this? Let's try and understand this. Now, what are the reasons, right? What was the necessity to adopt such a system? One, there is a diverse group or different group of consumers in the domestic market. And it doesn't help if I have a single rate of GST on all the goods and services. What do you mean by this? Right, I'll take two products here. One is an Audi car and the second one is Hawaii chappals. Okay, Hawaii chappal and Audi cars. A simple question to you people. Don't you think the consumers of Audi car are completely different compared to consumers of Hawaii chappals? Hawaii chappal or Paragon chappal, whatever you want to call it as. Right, simple question to you people. Start participating. Saturday afternoon, I know. Right, so start participating. Argument is the consumers of Audi car are different compared to the consumers of let's say Paragon or let's say Hawaii chappals. Somebody says no sir, both are one and the same. No my dear, right? The Audi car basically is consumed, purchased mainly by the rich people. Hawaii chappals are mainly consumed by poor people or middle class households such as you and me. So the argument is simple here. If the products are different, consumption groups are different, how can you have only one rate of GST? Think of it. How can you have only one rate of GST? Right? Don't you think that doesn't make absolutely any sense in this context? So that is one reason. Second, in that case, let's say, sir, can we have only one rate of GST at a lower level? Let's say all the 1,000 plus goods and services will be taxed at 5%. All the goods and services will be taxed at 5%, which means no doubt the goods will not be very costly and poor people will not have to pay more taxes. But the concern was, if I tax all the goods and services at 5%, what about my revenues? What about the GST revenue collection? So if you tax at 5%, don't you think the amount of revenue collection would go down? That was one more concern. Now, then somebody would say, sir, rather than 5%, let's say charge everything at 12%. Not 5%, let's say charge everything at 12%. So that the government revenue collection will increase. Of course, yes. With a higher tax rate, right, you might expect a higher tax revenue collection, but what about poor people? Don't you think certain goods which could be or which should have been cheaper in the market because of a higher tax rate will become costly now? Is it okay? It will become costly. So looking at all these factors, looking at all of these particular factors, Government of India finally decided, okay, let's have a structure wherein single rate is not there, multiple rates of GST are there. 5% on some of the goods, 12% on some of the goods, 18% on some of the goods, and 28% on some of the goods. Let me know, is the point clear to all of you? Is it clear to you why did we adopt multiple rates under GST? And there is one more point here. it may become regressive in nature. What do you mean by that? A rich person, right, let's say will purchase Audi car, has to pay higher tax rate. A poor person will purchase, let's say, a Paragon chappal, he is also asked to pay, let's say, 28% tax rate. Don't you think this is a regressive taxation? Right, rich person should be paying, right, more taxes, right? Basically, a poor person should be asked to pay lesser amount of taxes. So these are some of the reasons why government adopted a structure where we'll have multiple rates like this. But having multiple rates has its own disadvantages, has its own concerns. What are these? First one, very difficult to administer. More slabs means, more rates means, more difficulty. So what do you mean by that? First and foremost, I hope remember the central theme of GST. Central theme. What is the central theme of GST? One nation, one indirect tax. Do you remember this? One nation, one indirect tax. Now, when you say one nation and one indirect tax, is it okay if you have multiple rates within one indirect tax? Don't you think that will defeat the whole purpose of having GST? That is first point. Second point is, imagine you're a manufacturer. Understand this carefully. Imagine you're a manufacturer and you will purchase certain raw material, and the raw material cost, raw material taxation is 5%. One raw material, 5%. You'll purchase another raw material, let's say 12%. You'll purchase another raw material, let's say 18%. Now you'll use these raw materials to produce two goods. One tax rate is 18%, another tax rate or another good will attract a tax rate of 28%. Now you tell me, is it easier to file all these documents? Just think of it. You purchase 3 raw materials, all the 3 raw materials have 3 different tax rates. Now you will manufacture 2 products which have 2 different tax rates. Now, can you imagine the difficulty in terms of, let's say, filing the tax documents to the government and trying to explain what product attracts how much tax rate, how much credit you are supposed to receive, etc., etc., etc. Again, you don't have to by heart the numbers here. Logic is simple. Administration will be very, very difficult. Now, just to prove this point, I'll give you one example. Please don't write it in the exam. When we introduced GST, all of you heard of a sweet called as Barfi? Barfi, right? Sweet delicacy, right? In fact, there's a movie also in the name of Barfi. Now, when this particular GST was implemented or was introduced from 2016, this particular Barfi, right, that's a sweet, there was a lot of issue related to taxation on that. In some cases where the Barfi, right, had only, let's say, a dry fruit on the Barfi, GST rate was different. A Barfi with a chocolate layering on it, GST rate applicable was different. A plain Barfi, again the GST rate is different. So a product which is a simple product, right, only one product, Barfi, but different varieties, different tax rates. So that leads to a lot of difficulties in terms of administration of taxation. Done? Right, so administrative difficulties. And within the administrative difficulties, there is a very technical term called as inverted duty structure. Inverted duty structure. Now, I'll explain to you the concept of inverted duty structure, but let me ask you a very simple question. All of you are clear with the concept of input tax credit? Let me know. All of you are clear with the concept of input tax credit or not? What is an input tax credit? Simple. Whatever taxes you pay on the inputs are credited back to you. I repeat, right? Whatever taxes are there that you have paid on the inputs, these are credited back to you. That is called as input tax credit. Meaning what? Let's say I will purchase plastic to manufacture this bottle. I repeat, right? I will purchase a plastic to manufacture this bottle. And when I purchase the plastic, imagine I've paid a tax of 10 rupee. Government says that 10 rupee will be credited back to me. Because the government is crediting it back to me, I do not have to transfer the 10 rupee tax on the consumer. That is basically a concept of input tax credit. Now that is point number 1. Follow this very carefully. That is point number 1. Point number 2. Imagine you are a very small manufacturer. Very small manufacturer. In that context, is it okay if I say, by the virtue of being a very small manufacturer, the amount of money that is available to you, I will use the term capital here, working capital. The amount of money that is available to you is limited. Is it okay? The amount of working capital or the money that is there with you, it is limited. That is point 2. Point 3, let's go step by step. Follow this carefully. Point 3, when the government says input tax credit, government might give this in a span of 15 days. Government might give this credit in a span of 30 days or 45 days. Now follow this carefully. Simple question to you people. If you are a small manufacturer, would you want your money getting stuck up with the government in the form of input tax credit? I hope you understand this. You're a small manufacturer, right? The amount of money that is there with you is limited. In that context, would you want your amount of money or certain amount of money which you're supposed to receive stuck up with the government because they will give it after 30 days or after 45 days? What is the meaning here? Let's say hypothetically you are supposed to receive input tax credit of 10 rupee. Don't you think it is better to get this 10 rupee back within, let's say, a week rather than getting this back after 1 month? Is the logic okay here? I understand. Don't you think it is better to get this 10 rupee back, right, to you in a week or let's say even within 15 days compared to giving you that 10 rupee back after 1 month? Because the argument is, again, go back to the basics here. You are a very small manufacturer. You do not have sufficient amount of money. In that context, faster the government will credit the amount back to you, more relief you will get. So far so good? Now, use all of this. Let me explain the concept of inverted duty structure to you. Now, imagine you're a manufacturer, and when you're a manufacturer, you will purchase raw materials and pay tax, that is GST, to the government. You will manufacture a product, sell it in the market, collect a tax and give it to government. Is it okay? Follow the step here. Step 1, you will purchase certain raw material, you will pay tax which will go to the government, and government will give the tax back to you. This is nothing but input tax credit. And in the step 2, you will manufacture the product, sell it in the market, collect the tax from the customer, transfer the GST to the government. Any difficulty in understanding this? This is step 1. This is step 2. Now let me tell you the concept of input tax credit. Let me tell you the concept of inverted duty structure. What is this inverted duty structure? Whenever you purchase something, that is whenever you purchase inputs, right? Remember this, whenever you purchase inputs, if the tax on the input is greater than the tax you collect on the output, that is called as inverted duty structure. I repeat, inverted duty structure simply means it is a situation wherein the tax that you have paid on the input is greater than the tax that you have collected when you sell the output. Any difficulty here? If I write numbers, if I write 15 rupees here and 10 rupee here, this is classic case of inverted duty structure. Right? Is it okay? Whenever the tax on the input that you have paid is greater than the tax that you will collect when you sell the product, that situation is called as inverted duty structure. Now some of you will ask, sir, what is the problem with this? whenever there is an inverted duty structure, is it okay if I say that a large amount of money of yours will get stuck up until unless the government will provide input tax credit? Let me know, right? Large amount of precious capital, right, of a manufacturer will get stuck up in the system as long as the government provides input tax credit. Now some of you will say, what is the problem with this, sir? Because there is an inverted duty structure, 15 rupee of yours, very, very important money for you. I hope you understand this. Your 15 rupees is there with the government. Until unless the government will give it, you do not have the 15 rupee. If the inverted duty structure was not there, step 2 10 rupee, let's say step 1 7 rupee. Hypothetically, if there is no inverted duty structure, step 2 is 10 rupee, step 1 is 7 rupee. Now simple question to you. As a manufacturer, you would want to receive, let's say, 7 rupee after 1 month or 15 rupee after 1 month. And that's your own money, by the way. Don't only look at 15 and 7. Please understand the point here. Your 15 rupees there with the government. Your 7 rupees there with the government. Government will give it back after 1 month. Don't you think your 7 rupee getting stuck up in the system is better compared to 15 rupee getting stuck up in the system? Let me know. Let me know if you agree or disagree, right? And because there is an inverted duty structure like this, precious capital of the companies is getting stuck up in the system. And this happens for a very simple reason. We have different rates, right? Let's say hypothetically here we have 18% rate applicable. Here we have 12% rate applicable. Don't you think because of this, the tax rate applicable here could be, or taxes imposed in the step 2 could be lower than taxes imposed in the step 1? Sir, any example related to this? You can see inverted duty structure in the textile. You can see inverted duty structure in the footwear. Again, the logic is simple. Sir, very difficult. No, it is not difficult because you are not listening to me correctly. Follow this very carefully. Inverted duty structure simply means the tax on the input is greater than tax on the output. Is the point clear? I'll repeat. Tax on the input is greater than tax on the output. On the output, you collect the tax from the customer. On the input, you pay taxes which are collected by the government, given back to you in the form of input tax credit. Now, whenever there's an inverted duty structure, it simply means the tax on the input is higher. That amount might be given to you by the government maybe after 30 days, maybe after 45 days. If that inverted duty structure was not there, rather than 15 rupees, your 7 rupees will be stuck up with the government. Your 8 rupees could be stuck up with the government, or 5 rupees could be stuck up with the government. So rather than 5 rupees, now your 15 rupees is there with the government, which means you do not have access to 15 rupees. More capital is there in the system. Okay, right? So this is the discussion related to the issue, right, that would be created because of multiple tax rate. Right? It goes against the central theme of GST, that is one nation, one indirect tax. Done? Right? So these are some of the things. Right? Be very, very careful. Books will not give you this, but UPSC will ask you, what is the reason why we have multiple tiers under the GST? These are the reasons. Please quote them. In addition to this, now we know that multiple tier structure is a problem. All of you will agree. Having a multiple tiers or having multiple rates of GST is a problem. So what is the solution then? What can be done in this context? Right? Basically, they will say reduce the number of slabs. Reduce the number of slabs. Right? That is, how many rates are there under GST? Let's reduce them. The question is how? How can we reduce the number of rates under GST? Follow this carefully. There was one proposal, very, very old proposal in fact. There was a proposal that 12% and 18%, rather than having 2 rates, we should merge both of them, have only one rate of GST, 15%. Is it okay? Rather than having 12% and 18% separately like this, right? Let's merge both of them, have only one rate, 15%. And most of you feel that, okay, this is rational. This is so good, right? And neither am I losing taxes here because I've increased 3%, nor am I earning more because I've reduced by 3%. And most of you will do simple calculation, 12 plus 18 divided by 2 is equal to 15. You simply come to a conclusion, yes, this is correct. But please understand, the concern of the government was, with the merger of 12 and 18%, revenue losses will take place. There will be revenue losses. Why? Most of the revenue collected today is under 18%. Majority amount of the revenue that is collected will be under 18%. Meaning what? Let me take a simple number here. Imagine 100 crore worth of goods are taxed at 12%. 500 crore worth of goods are taxed at 18%. Which, is it okay if I write it directly? Here I'll be able to collect 12 crore rupees. Here I'll be able to collect 90 crore rupees. So sum total of tax revenue collection now will be 102 crores. 102 crores. Now imagine you merge both, that is 12 plus 18% is merged. We will have 15% revenue or 15% tax. Total value of goods and services on which we are going to impose taxes will be how much? 100 plus 500, 600. 15% of 600 rupees would be how much? 90 crore rupees. So compared to earlier system where you earned 102 crores, now your revenues will fall down automatically because of the merger. So the concern of the government was, we will end up losing revenues. And that is a precise reason even today this has not been implemented. But there is a recommendation. There is one institution which functions under the Ministry of Finance, National Institute for Public Finance and Policy, NIPFP. I repeat, there is one institution which functions under Ministry of Finance, National Institution for Public Finance and Policy, NIPFP, which has recommended that we should merge it. We should merge 12 and 18%, make it 15%. Make it a 15%. So now the concern is government will lose revenues. In that context, the institution recommended that 5% should be increased to 8%. Right now we have 5% GST, increase it to 8%. And we have 28% GST, increase it to 30%. So here, by merger, we are worried about revenue losses. By increasing the GST rate, on the other side, we'll be able to compensate for the revenue losses. So now, what is the use of this? If UPSC will ask you a question in the mains paper, please write this as a way forward. I hope you understand. Please write this as a way forward. Most of you, when you're writing mains answers, you do not write what is the solution, what is a way forward for the problem. Here is a way forward for you. Merge 12 and 18, make it 15. But for compensation of the revenue losses, increase 5 to 8% and 28% to 30%. Now, don't you think if we do this, number of GST rate will come down? Numbers, I hope you understand this. Number of GST rates will come down. Right now we have 5, 12, 18 and 28. Rather than having 4, we will have only 3. That is 8%. Second one will be 15 and the third one will be 30. Okay, done. So this is the discussion related to various let's say slabs or various rates under GST. But because of this, poor will suffer? No, my dear, most of the goods which are consumed by the poor people already are kept at 0%. They're already kept at 0%. Okay, now this is basically how the GST is functioning. I'll give you more examples, calculations, not required for UPSC, but let me prove why GST is better than the earlier system. Just give me some time. Under the old method as well as under the GST, what has changed? One, earlier goods as well as services were treated separately, taxed separately. But under GST, both of them are treated as one and the same, only one rate, GST, goods and services tax. Earlier, different states had different tax rates. Now, doesn't matter which state, there will be only one tax rate, that is GST. Third, earlier national market was not possible. What do you mean by national market? Simple. Whenever the good attracts the same tax rate throughout India. I repeat, what do you mean by national market here? Whenever a product is sold across different states but attracts the same rate of tax, that is called as a national market. So earlier national market was not possible. Now the national market is possible. Earlier there were certain taxes which you could classify as a tax on production. Now, right, these particular taxes, be it VAT or be it GST, etc., all these are destination or consumption based taxation. There was a cascading effect, and now we are trying to address cascading effect with GST. National good, my dear, I did not say national good, I said national market. For example, if you sell the bottle in Karnataka, 18%. Uttar Pradesh, Bihar, Assam, Sikkim, Rajasthan, Kerala, GST rate of 18% only. So whenever you have a same rate of taxation on the product, that is referred as a national market. Okay, so this is how GST is better compared to earlier system. Now, let me show you two calculations. Should you by heart the calculation? Absolutely no. I hope you understand. Should you by heart the calculation? No. Just observe two very important things. One is their cascading effect and how the tax is distributed. Simple. Is there cascading effect, how the tax is distributed. Now I'll have two calculations. Basically one related to, right, within the same state, that is intrastate. Right, old versus new comparison within same state, that is intrastate. And the other comparison will be interstate, that is in the earlier system, right, how the goods moved from one state to another state, how the taxes were imposed, collected. Under the GST, how the collection will happen. Let's start. Let's start, follow it very carefully. If you miss the calculation, right, you will simply say, sir, how this number has come. Follow the calculation. First, before GST, let's assume here is a particular seller. He might be selling a good, or let's say they are selling or they are providing certain service. So they will provide the service and the government will impose a service tax at 10%. Okay, at 10%. So basically when they will provide the services, they will charge money, collect the money from the buyer. So the cost of the service will be how much? 1100 rupees. 1000 plus 10% tax, 1100. Now B has purchased it. They want to use this and they want to sell it in the market. Now some of you will simply say, sir, how can service be transferred? I'll give a very simple example. If I'm going to transport goods, is it not a service? Just think of this and let me know. If your manufacturer, right, I will take your goods, transport it to another state, will I not impose charges on it? Of course, the answer is yes. And will it not attract a service tax? Again, the answer is yes. So that is the context I'm referring to here. Please don't worry about it. So cost price for you will be 1100 because you have purchased the services worth 1000 plus 100 rupee tax. Now you want to earn a profit of 1000 rupee. So what you will do, you will decide to sell the product in the market at 2100 rupees. The problem is simple here. When you want to sell it at 2100, right, have a look at this. The state government now will impose sales tax. I hope you understand. The state government will impose sales tax here. And sales tax will be imposed on the selling price of the product, because input tax is not present in the sales tax. Do you remember it or not? Before the lunch break, all of this we have discussed. So 10% on 2100 will be 210 rupee. You will end up selling the product in the market at 2310 rupees. Now what can you observe in the pre-GST? cascading effect. Can you observe it? Is there a cascading effect? Answer is yes, by the way. Even if you don't answer, I will only answer it now. Is there input tax credit? No. Under pre-GST, there was no the idea of an input tax credit, especially under the excise duty regime as well as the sales tax regime. There was no input tax credit. So no input tax credit. Cascading effect is there. Tax burden on the consumer would be very, very high. Market price of the product is also very high. Now, under GST, what will happen? Follow the discussion very carefully. Price the same, 1000 rupee. GST, let's assume same rate of GST, 10%. So the tax rate, GST that would be collected will be how much? 100 rupee. Now you have purchased the services. Actual cost is 1100. But please be very careful. Whenever you are calculating the next step, changes will happen now. Whenever you're calculating the next step, government has already told you whatever is the GST that you have paid on the inputs, I will credit it back. I will provide input tax credit, ITC. I will provide input tax credit. So when you are going to get that 100 rupee back, will you transfer it to consumers? Basic question. You have paid a tax of 100 and government says, I will give that 100 rupee back to you. Do you transfer that 100 rupee to the buyer now? Answer is simply no. You should not transfer it. So what you will do? You want to earn a profit of 1000. So out of 1100, you will simply deduct the GST of 100. What you are left out is 1000 here and 1000 here. Selling price will be 2000 rupees. And again a GST of 10% is imposed on 2000. 200 rupee will be collected. Now follow the next step very carefully. Follow it very, very carefully. In the first step, government has collected how much GST? 100. Is it okay? Step 1, how much GST has been collected? 100. In the step 2, how much GST has been collected? 200. But please be very careful. This 100 which was collected is credited back to you. Simple. Step 1, 100 rupee that was collected will be given to you, credited back to you. Now totally how much is the GST collected? 200. All of you agree? Total GST after giving you the input tax credit will be 200. Now do you remember? GST will be divided into two parts. One is CGST and the other one is SGST. So 200 equally divided, 100 and 100. 100 will go to the central government, 100 will go to the same state government, because I'm talking about intrastate. I'm talking about intrastate, that is within the same state. So 100 out of this will go to central government, remaining 100 will go to the state government. Now just make an observation. Under the GST structure, has the market price come down? Just make an observation. Second, under GST, is there an input tax credit provided? Right. Third, under GST, the tax burden on the customer, has it come down? The answer to all the questions that I've asked right now is yes, yes, and yes. Right, answer to all the three questions, and the calculation is there right in front of you. Just make an observation. Right, so ITC, input tax credit, is provided. Government will ensure there is no cascading effect. Government is ensuring the tax burden, right? The tax burden on the customer is lowest. Right, that is how the GST is much, much better system compared to earlier system. Now, this example is intrastate. Intrastate means within the same state. What will happen if the goods are moving from one state to another state? I understand. What will happen if these are moving from one state to another state? In that case, what will happen? Let's try and understand. Same, right? Same calculation. Only thing is that earlier, right? Understand this carefully. We assume the good is produced within one state, consumed within the same state. Now our assumption is good is produced in one state, moves across the border. Let's say it is consumed in the second state. Now first point, when the good is moving from one state to another state, Don't you think CST was applicable earlier? Simple. When the good is moving from one state to another state, don't you think the CST, right? CST, Central Sales Tax, we have discussed this. CST was applicable. Point one. And second point, whatever CST is imposed and collected will be given to the state where the production has happened. So just remember these particular points. Let's start. Let's imagine company A has produced, which is in the state 1, selling the good to company B. And now company B is adding value, right, using the raw material or intermediary good, etc., is selling it to company C. Either say company C or customer, doesn't matter. Concept is important. Let's start. Let's start now. Company A is in state 1, company B is in state 2. Price of the good is 1000 rupee. It will move across the border. Let's say at the border 10% central sales tax is collected. As a result of this, company B will be able to purchase the product at 1100 rupees. Step 1. Now company B will use this intermediary good, produce a good. They want to earn a profit of 1000 rupee. But please be mindful here. Company B has already paid a tax of 100 rupee, and that 100 rupee has gone to state 1, which is not given in the form of input tax credit because company B is in another state. Simple. They are registered in another state. Company A is registered in the state 1. So company B has purchased, has paid a tax of 100. It doesn't get the input tax credit. Hence, it will simply take it as it is. That is 1000 plus 100, 1100. Selling price will be 2100. And when the selling price is 2100, again state B, or let's say state 2, will impose a tax of 10%. That will be 210, and that will cause a cascading effect in the system. Is the pre-GST system clear to you? Again, whatever we have discussed so far, I am putting it in the calculation form. Under GST, what will happen? Right? Under GST, how the calculation will change. First step will remain same. Nothing will change. In the sense, rather than CST, now there is IGST. Is it okay? Right. So understand this. Rather than CST, now there is IGST. There is no CST now. Integrated GST. And I've told you before the lunch break, whenever the goods are sold across the states like this, we will simply apply it as IGST. You guys understand the logic here? If I write GST and IGST, you should be able to understand whether the good was sold within the same state or across the state. I hope you understand. You should be able to understand whether the goods were consumed within the same state of production or the goods were consumed out of the state of the production. If I simply write GST, is it going to the state where the goods were produced and consumed? And is it going to the state which is a different state compared to the good where the production has happened? So that is the reason. It's very simple. And they'll simply say exports, treat it like exports and imports. Whenever you're basically crossing the border of a state, apply IGST. Integrated GST. Okay, let's start now. Price is 1000, right? It is moving from one state to another state. IGST of 10%, right? The purchasing cost will be 1100. Cost price is 1100, but I will not count it as 1100 because 100 IGST will be refunded, will be given back to me. Now, I want to earn a profit of 1000 rupee. Selling price is 2000 or 2000 rupees. 1000 here, 1000 here. So again, the GST of 10% is applicable. So that is 10% of 2000 will be 200 rupees. And the price of the product in the market will be 2200. Now have a look at this. In step 1, I've collected 100 rupee IGST. In the step 2, I've collected 200 rupees IGST. Apply the same knowledge. Whatever we have learned, apply the same knowledge. 100 rupee that you have paid, assuming let's say your company B, 100 rupee IGST you have paid, government will give it back to you. Government will provide it as input tax credit. So is it okay if I say in this transaction that I've given here, total amount of GST collected after giving you input tax credit is 200 rupees. Is it okay? After giving the ITC, the total amount of GST that has been collected is 200 rupees. But it is not just GST, it is IGST. So divide this 200 into two parts, 100 rupee and 100 rupee. This 100 anyways will go to the central government. Now comes the question about this 100. At the SGST, which state government should get 100 rupee SGST? And as per the GST structure, remember this, it is the state where the consumption has taken place. Is it okay? In this example, the consumption has taken place in the state 2, right? The consumption has taken place in the state 2, and it is this particular state which will get this 100 rupee. Any doubts here? I'll repeat it. In this example, it is a state 2 where the good has been consumed. Now some of you will say, but sir, in slide it is written state 3. Let's assume company B is present in state 2 and the consumer is present in state 3. I hope you understand. Right? Company B is present in state 2 and the consumer is present in state 3. Now all of you will agree the SGST component has to go to state 3. Now some of you will say, sir, what if we move to, right, let's say fourth state? Same concept. Again impose IGST. Whatever you have paid in the previous step, get it as input tax credit. Whatever is the final GST, divided into two equal parts. One half will go to central government, remaining half will go to the state where consumption has taken place. Is it okay? Right, so that is how the GST system is much better compared to the earlier, that is the pre-GST system. Right, so this is the two examples. Right, some of you are asking, do we remember the calculation? Argument is simply no. Right, please do not by heart calculation. UPSC will not ask you calculations. You don't trust me, which I know some of you will not have any trust on me. Have a look at the previous year question papers. You will only realize. Okay, right, so any doubts here? Any doubts? Can I go to the next concept? Sir, in this case, what about the production state? Will it lose a tax? My argument to this question will be simply this. Don't try to always gauge loss and win looking at only one example. I hope you understand my argument here. Based on only one example, do not come to a conclusion whether one state is winning or the other state is losing. Why? I'll give you an example. Follow this. Let's say good is manufactured in Maharashtra. Now that good is taken outside, sold, let's say in Gujarat. Consumption happens in Gujarat. SGST component will go to which state? Gujarat. All of you agree? SGST will go to Gujarat. Now, is it always that? Is it always that good is manufactured only in Maharashtra, then consumed in Gujarat? I hope you understand this. Right? Don't you think something that is manufactured, let's say in Tamil Nadu, will be consumed in Maharashtra? Something manufactured in Maharashtra will be consumed in Maharashtra only. Something that is manufactured in, let's say, Gujarat will be consumed in Maharashtra. So that's a reason, based on one example, do not come to a conclusion one state is losing, another state is winning. Absolutely no. In fact, understand this. When the GST was proposed, some of the states, Tamil Nadu, best example, was opposed to GST. And the reason that they gave was, apart from federalism, etc., one of the reasons that they gave was exactly the question that you are asking. If the good where it is consumed, if that state gets SGST, then don't you think if I'm manufacturing and my neighboring state will consume, I will end up losing SGST component? Fact is, yes, you will end up losing, but you are simply assuming everything you will manufacture and whatever you have manufactured will be consumed by some other state. That is a wrong assumption to begin with. In fact, as per economic survey as well as the government of India's documents itself, you will realize that the states which have collected high amount of GST are Maharashtra, Gujarat, Tamil Nadu, Karnataka, Andhra. I understand. And the logical reason to that is simple. These are major production states. I understand. In terms of GDP, they are leading. In terms of production, they are leading. And it doesn't mean that whatever they produce, they will export it to some other state. Their states, by virtue of having higher GDP, consumption in the states will also be very, very high. Does it make sense or not? If you arrange the states based on the GDP, let's say a state has a very high GDP, does it also not mean that consumption of goods in the state is also very high? Right? So by that logic, you can simply make an conclusion here. It's not always that the states will end up losing. It's just that, right, only one example will give you that impression. Okay, so this is a discussion regarding GST. Now, related to GST, there is one more authority, GST network. GST network. Right, GST as usual will stand for Goods and Services Tax, and N stands for network. Now let me ask you a very simple question. All of you have been to a shop or restaurant or a hotel, whatever it is, and whenever you have been to a shop or restaurant or right wherever these marketplaces are, have you seen the restaurants displaying GST number? Just think of it, right? Have you not seen these companies, or let's say the service providers or the product sellers, displaying their GST registration number? Right? If you have not observed it, observe it now. If you have any bills, whatever you have purchased, if you have any bill, just open the bill and you will see GST registration number there. Right? What is this GST registration number? Simple. All the service providers as well as the goods manufacturers in India have been given an identity. I understand, just like we have Aadhaar number, the service providers as well as the sellers in the market have been provided with a registration number. That is nothing but GST registration number. Now, what is the idea here? What is the importance of all of this? Simple. There is an authority. There is an authority by the name of GST network, which facilitates registration of businesses under GST, which will provide a GST registration number to all of this. It will basically allow for filing of the returns. What do you mean by filing of the returns? Simple. Companies will start submitting all of these documents to the authority. Right? I hope you understand the term filing of the returns. You will file income tax returns. What do you mean by filing of the returns? You will submit, that is, you will pay whatever taxes you are supposed to pay. You will submit all the documents. That is called as filing of the returns. So the backbone, if I were to put it in a very simple statement, the backbone which will provide the support to the implementation of the GST is the GST network. Right, and have a look at this. It is referred to as a non-profit organization. Remember this. This is referred to as a non-profit organization. What do you mean by non-profit organization? Generally under the Companies Act, right, whenever the companies are registered under the Companies Act, and if these are registered under the Section 8 of Companies Act, these are called as non-profit organizations. Right? I'll give a very simple example. Charitable organizations. I'm pretty sure you've heard of charitable organizations. Whenever charitable organizations are set up, these are set up as non-profit organizations itself. Right? So GST network is a non-profit organization. It will provide whatever is the requirement of supporting infrastructure for the implementation of the GST, such as the analysis of the taxpayers, how much taxes they have paid in the last 10 years or last 5 years, in which month the highest amount of taxes have been paid, how much is right basically the input tax credit claimed by these companies, etc., etc., etc. The analysis of the taxpayers, registration of the taxpayers, filing of the returns, etc. So these are some of the very important functions of GST network. Now, apart from this, the point that was there in the newspapers for last couple of years has been that the ownership of the GST network is set to change. I've checked the website. So far, there has not been any confirmation. But again, the Union Cabinet has approved that the ownership of the GST network will actually change. What is the ownership? When we set up the GST network, the ownership was simply 49% with the government. Remaining 51% was with non-government companies. Non-government means private sector companies. Right, so 49% was with the government. Again, within the government also 24.5% was with the central government. I'll write center here, and remaining 24.5% was with the state governments. The Union Cabinet has passed a resolution where they say, rather than allowing the private sector entities, non-government entities to own 51% in the GST network, will transfer the complete ownership to government. That is 100% will be with the government, equally divided between center and the state. This is the information regarding GST network. Right, can I go to the next one? Any doubts so far? Let me know. Any doubts? Right, in spite of GST, why people feel government is collecting more tax now compared to pre-GST? People will feel anyways that the taxes are very high, but you tell me any solid proof to show that taxes collected now are higher than the pre-GST. Understand the logic here, right? Some of you will look at it, right? Some of you will look at this calculation and say, sir, as per the calculation, and if I go by your explanation, the market prices of the goods should have come down. Some of you will have this argument. But what I've seen is, market prices in the recent times, that is, let's say 5 years ago, compared to that, market prices have increased. Does it mean that GST has not been successful? My dear, it doesn't mean that. I hope you understand. It doesn't mean that market prices have increased because of GST. Absolutely no. Don't you think in the last 5 years, prices of steel has increased? Don't you think in the last 5 years, inflation rate is there in the market? And that is the reason why the market prices have naturally increased. Right? So that is the right argument there. Why GST number displayed in restaurant? If you are, let's say, a service provider, government guidelines say you will have to not only display, because you will have to prove that you are a provider who is going to pay GST to the government. If you are not registered, you do not have a GST registration number. If you don't have a GST registration number, right, I'll give a very simple example. Imagine I'm a manufacturer. Follow this carefully. Slightly technical, follow this very carefully. Imagine I'm a manufacturer of the bottle. You are going to supply certain steel for me. I will pay, right, certain amount of money, including GST to you. But now my simple question is this. What if you are not registered under GST? Will I feel comfortable doing business with you? Let me know. I hope you understand this. Right? Will I feel comfortable doing business with you? Right? Some of you are saying yes. How? How? Right? How do you feel comfortable if you're not registered? Right? Let me replace or flip it so that now, because it's your money, you will feel concerned. You will purchase certain raw material from me. I'm not registered under GST. Will you feel comfortable in doing business with me? You will pay GST. I will not give it to government. I'll keep it with myself. Do you think you'll get ITC? Just think of it. I hope you understand. Just think of it. The whole system, right? The whole system functions on a very simple concept. You will pay money plus GST. I will give the GST to the government. And tomorrow, when you will show to the government that when you purchase raw materials, you have paid GST, government will transfer that credit to you. I hope you understand this. How does the system work? Simple. You will purchase raw material from me. I will issue a receipt to you. The receipt has my GST registration number. Receipt also has how much GST you have paid when you purchased the raw material. Now, tomorrow, when you file all of those documents, which is nothing but filing of the returns, you are telling the government, right, that you have purchased raw material from me and you have paid GST. If I'm registered, I will transfer the GST to the government. If I'm not registered, how will government come to know that I've given the 10 rupees to them? Just think of it. That is how the input tax rate actually functions. So that is the reason everybody who is registered is supposed to display, and when the receipt is given to you, when the bill is given to you, they're supposed to clearly write what is their GST registration number. Done. Next is anti-profiteering measure. If I purchase products and my friend's company can claim ITC that may tax avoidance, is there any evasion? My dear, if you're going to pay GST to somebody who is not registered, you tell me, is it your mistake or not? Why will the government give you ITC in the first place? Right? Again, I don't understand, why do you want to create situations where the answer is so blank in front of you? Why do you want to create situations? Okay. Now, anti-profiteering measures. Or before that, there is one more question. Why there is no GST on petrol and alcohol? In previous batch, you told petrol is under GST, but GST rate not applicable. My dear, not just in the previous batch, even in this batch, I told you, petrol on this GST has not been announced. Be very, very clear with what is the statement. Even today in the morning batch or in the morning session, I've told you this. Petrol, or for that matter, any fuel, GST is there. But the GST Council is yet to notify the rate on it. Right? That is the right representation of what I've told you. The reason is very simple. Be it alcohol, be it petrol, etc., the states are going to impose, or they are imposing lot of taxes and collecting lot of revenues. Now, if you notify GST, what is the highest rate of GST in India? Highest rate of GST is 28%. And when you have purchased petrol, how many of you have actually checked out? How much taxes are you paying? Let me see. If the price of the petrol that you are going to purchase, let's say hypothetically is 100, how much out of 100 do you think you are paying to government in the form of taxes? Right? How much out of 100? It is generally in the range of 60 rupees. Right? Right now it could be around 50 because recently it has been reduced, but generally it is around 60 rupees. Right? Generally around 60. If you compare the taxes that the government imposes, both central as well as state, on petrol, India is one of the leading countries in that. I hope you understand. That's the reason very often you will see certain snippets like this in the WhatsApp. Petrol cost in Dubai is this much. Petrol cost in Pakistan is this much. Petrol cost in Bangladesh is this much, etc., etc. Don't go by that comparison. It is a very, very faulty comparison. But fact is simple. If you're going to pay 100 rupee on a liter of petrol, generally around 55 to 60% of it is in the form of central government taxes as well as the state government taxes. Right? That is generally the factor. Remember this. Now, which means, understand this, actual cost of the petrol is 40. If you include the taxes of 60 rupees, you will reach 100 rupee. A simple question to you people. If you impose 28% tax on the petrol, how much tax do you think the states will be able to collect out of it? Just think of it. If you're going to impose 28% tax on this, at 28%, that's the highest slab, by the way. Right? How much money do you think the state governments will be able to collect? Now, don't you think, compared to the current situation, the taxes which will be collected by the central government as well as state government would automatically fall, not just reduce, right? Steeply fall like this. And that is the precise reason on alcohol, state government imposes and collects a lot of taxes. They are not ready to give it away. On petrol and diesel, GST is there, yet to be notified, because the states and center is not at the same level. Right? Any issue here? I hope you understand why petrol and diesel, alcohol, etc. are yet to be, right, are yet to have an idea of GST. Okay? Done. Now come to the next point here. Anti-profiteering measure. Anti-profiteering measure. What is this anti-profiteering measure? Let me give a very simple example. Now, before that, basically, what do you mean by profiteering? Understand this carefully. Imagine I'm a manufacturer and a seller of a product. Let's say price of the product is 100, including profit, by the way, or else I'll write profit separately so that you understand what I'm trying to convey here. Right? Many of you will keep on asking, sir, what about profit? What about profit, etc. Actual cost, let's say, actual cost of manufacturing this, let's say, is 85 rupees. I want to earn a profit of 15 rupees. Right? And so totally the price will be how much? 100 rupee. My selling price will be 100. Now let's say government will impose a GST of 15 rupees on this. So what will be the MRP? MRP will be 115. Actual cost, profit and tax. And this is the market price. Any difficulty in the calculation? I've taken very simple numbers. 85 is the actual cost of production. 15 I want to earn profit. 100 plus 15 rupee tax of the government. I want to sell it in the market, or I'll sell it in the market at 115 rupees. Now imagine government will reduce the tax from 15 rupees to 8 rupees. Simple. Government will reduce the tax from 15 rupees to 8 rupees. If I do not change anything, I'll keep everything else constant as it is. If I keep everything else constant, 85 rupees plus 15 rupees will become 100 plus 8, the MRP, that is the selling price in the market, the maximum retail price should be 108. Any difficulty in understanding this? Any difficulty? Right. Now, what is the importance of this? Follow my statement carefully. Can I say that the complete benefit of tax reduction has been given to the buyer in the market? I will repeat the statement here. Right? Can I say that complete benefit, that's very, very important, complete benefit of tax reduction has been given to buyer? Now, rather than this, what if I do like this? I'll change the color of the pen, red color, so that you understand it is danger. So let's say the tax will be reduced to 8 rupees. You will tell the buyer, see, the tax has been reduced, so my market price also has come down to 110. Right? Buyers do not understand how the calculations are done. You are telling the buyer, government has reduced the tax, and I also have reduced, right, the market price. But please go back, look at the calculation now. Right, it will be the cost of the product will not change. I'm purchasing the same raw materials, same labor, etc. But if you want to reach 110, can I do the reverse engineering and say this has to be 102 rupees? All of you will agree? If you want to have a MRP of 110 with a tax of 8 rupee, this amount has to be 102. And your raw material cost, labor cost, nothing has changed. 85, how do you reach 102? It simply means you have increased your profit motive. Is it okay? This is dangerous. You have increased your profit. How much money you are making by government reducing the tax, the amount of profit you have earned more and more. This is called as profiteering. Understand this. This is referred to as profiteering. What do you mean by profiteering? Unreasonable higher profits. Whenever unreasonably you are earning higher profit, this is called as profiteering. Now, can I characterize the whole transaction into this? Just listen to my statement. Listen to my statement carefully. Government has reduced the tax, but the complete benefit of tax reduction is not given to the buyers. You will increase your profit motive, provide part of the benefit to the buyers. Any difficulty? Whatever I've said just now, any difficulty? I will repeat it. Government has reduced the tax. The complete benefit you have not given to the buyers. Part of the benefit you have given. Remaining benefit you have obtained. How? By increasing the profits that you are earning. Government says this is not allowed. Simple. Government says this is not allowed. Why? If I reduce the taxes, the complete benefit of tax rate reduction should be given to consumers or the buyers in the market. Meaning, if government will reduce the tax from 15 to 8 rupees, your MRP should decline from 115 rupees to 108 rupees and not 110 rupees. If you do that, I'll simply call this as profiteering. And government doesn't allow for profiteering, right? Only profits are allowed. Profits are basically here. You're earning a profit of 15 rupees and you're transferring the benefit to the consumers. This is allowed under GST. This is not allowed under GST. But profits are decided by the companies. Who said no? I'm also saying profits are decided by the companies. But please understand, you should not increase the profits at the cost of consumers. I hope you understand this. You should not be earning more profit at the cost of, right, not transferring the complete benefit to consumers. So when the government reduces the taxes, complete benefit of tax reduction should be transferred to customers. That is basically the concept of anti-profiteering. Now question arises, is there anyone to check this? Who will check whether the companies are transferring the complete benefit or not? Who will check it? Government of India set up an authority, National Anti-Profiteering Authority. National Anti-Profiteering Authority, NAA. Government of India set up a National Anti-Profiteering Authority which has started functioning in the year 2017. But this is very often there in the newspaper because of one reason. There is a clause simply provision. Clause which is also referred to as provision. There is one provision associated with anti-profiteering authority, that is, it has a sunset clause of 2 years. Now, before I tell you what is a sunset clause, all of you have heard of expiry date. Expiry date, not write anything, let's say products. You have purchased a bottle of juice, right? Does it not have an expiry date? You have purchased a packet of biscuit. It has an expiry date. What is the meaning of it? The product remains useful only for certain months. Let's say the product was manufactured on 1st of January. If I say 3 months is the expiry date, January, February and March. Before the end of the March, you will have to use the product. That is the basic concept of expiry date. Now apply the same logic whenever you come across the term sunset clause. Sunset clause simply means for what duration the provision or the guideline is applicable. I'll repeat it. For what duration the provision or the guideline is applicable. For example, what if I say that the National Anti-Profiteering Authority was set up in 2017 with the sunset clause of 2 years. What does it mean? Right? What does it actually mean? It simply means if it has started working in 2017, after 2 years, it will automatically stop working. Is it okay? I'll repeat it. Sunset provision or sunset clause simply means whenever a provision or a guideline is implemented by the government itself is giving an expiry date for it. If they say 2 years, 2017 they have started operating. So after 2 years, the authority will close. Any difficulty in understanding this? Now many of you will ask me, sir, why are we discussing the concept now? Very simple. It was implemented with the sunset provision of 2 years. Later it was extended by 2 more years. Later it was extended by 1 more year. And that is the precise reason, though the Anti-Profiteering Authority was supposed to shut down after 2 years, even today this authority is functional. And it is expected that at the end of this year, the authority will close and the functions of this authority would be transferred to Competition Commission of India. Right, so any issue with the Anti-Profiteering Authority, let me know. Otherwise, I'll go to the next one. Right? Basically, the evaluation of GST, what has been the performance of GST in the last 5 years. Any difficulty so far in the GST? Any difficulty so far? Windfall tax fully owned by the central government? Yes. The windfall, not windfall, windfall tax completely owned by the government? Yes. And again, some of you might be concerned as to what is a windfall tax. Simple, understand this. Windfall means unexpected returns, right, or unexpected amount of money that you are going to earn. That is called as a windfall. Now, why windfall tax is being discussed? Simple. You purchase, understand this very carefully, right? You purchase crude oil from Russia. Now, I hope you are reading the newspaper. Why this crude oil from Russia is important? Simple. When you purchase crude oil from Russia, I hope you know that other countries that are not willing to purchase crude oil from Russia, we are willing to purchase. Is the point clear to you? Many other countries, best example, G7 group of countries, that is developed 7 group of countries, they have imposed a ban on Russia. They don't want to purchase the crude. But for Russia, selling of the crude is necessary. So what they are doing is, in order to ensure that India will be purchasing, they are selling the crude oil at very, very cheaper prices to us. I hope you understand. Right? Cheaper prices to us. And India, because we are the net importer, very, very huge importer, we have continued to purchase crude from Russia. Now here comes the problem. In the international market, the prices of the fuels are higher because supply disruption has taken place. On the other hand, Indian companies are able to purchase crude from Russia at cheaper price. I hope you understand this. In the international market, crude prices are high. In India, we are able to purchase the crude because we are purchasing it from Russia. We are able to purchase at cheaper price, which means you are getting the raw material at very, very low price. And in the international market, the finished good cost is very, very high. Don't you think because of this, profit that you are going to earn would be very high? Just apply basic sense, you will understand. You are getting the raw material at very, very cheap price. But in the international market, the price of finished good is very high. Don't you think you are basically using these difference in the prices to purchase a cheaper raw material, prepare the finished good, and export it to international market and earn huge amount of profit? Government is saying this is windfall. I understand. Because of the differences in the pricing, you are earning huge amount of profit. Give me part of it. Simple. Give me part of it. That is called as windfall tax. Right? Any difficulty in understanding this? It's a very simple, if you understand the basics of economics, very, very simple concept. Every fortnight government says, I will decide what is the windfall tax. Right? So that's the reason every 15 days, you will come across announcement of the government regarding windfall tax. Okay, done. So what has been the performance of GST? Please have a look at it. Again, sir, should I by heart it? Absolutely no. Why? I'll tell you. This is the data for last year. By the time you write the exam, the data would be completely different. I hope you understand this. So you don't by heart this data. Next year, right, in the budget document, in the survey document, whatever the government says is the performance like this, please take up that data. Please don't by heart this. It is useless. It is not useful for descriptive answer writing, maybe after 1 year that you're going to write. So the number of the commodities which are covered under GST has been expanded. Number of taxpayers covered under GST has expanded. Now have a look at this. Based on this data itself, number of commodities, number of taxpayers, both have increased. Can I conclude that with implementation of GST, tax base has widened? Just think of it. Right? Can I make a conclusion that tax base has widened with the implementation of GST? And this is the amount of annual GST revenue collections. Right? Please have a look at it. Again, please don't by heart anything here. If you look at the data itself, recently the finance minister stated that the monthly GST revenue collection has been more than 1.4 to 1.5 lakh crores now. That's a very, very good amount, right? More than 1.4 to 1.5 lakh crores. Very, very good collections, right? So no doubt, in terms of, let's say, reducing the cascading effect, in terms of, let's say, increasing the number of taxpayers, widening the tax base, reducing the cost of transportation, etc., GST has performed very, very well. But does the GST have any concern? Is it a perfect system? Again, the answer is absolutely no. There are even today certain issues that are plaguing GST. We need to address it. One, there is a huge compliance burden. What do you mean by compliance? Simple. Understand this carefully. Technically speaking, UPSC will not ask you to write on compliance. Why? This is more of a governance issue. But let me define what is compliance. Compliance simply means the expenditure that you will incur to follow the guidelines or the rules of the government. To follow the guidelines or the rules of the government, what expenses the companies will incur. I'll give a very simple example. Based on that, you tell me whether it is going to have an impact on the companies or not. After the, or let's say during the times of the pandemic, didn't you see Government of India issuing a guideline to the companies saying that whenever the people are going to enter the offices, you'll have to check the temperature of your workers. Right? Have a look at this. You will have to check the temperature of the workers. And within the manufacturing facility, you will have to install sanitizers. And by the way, understand this, these are guidelines of the government. I have to understand, these are guidelines. A simple question to you people, think of it and answer. Don't you think because of these guidelines, the expenditures incurred by the government increased? Is it okay? Because of such guidelines of the government, expenditure incurred by the government automatically goes up. So understand the logic here. Whenever government will have guidelines like this or compliances like this, in order to implement these guidelines or rules, the companies will have to incur expenditure. Now many of you will ask me, sir, what is a compliance under GST? Every month you will have to keep on filing the GST returns. Right? Every month or once every 3 months, you will have to keep on submitting all the documents. You will have to generate the receipt, submit the documents. Now, simple question to you people. What if you do not know how to operate a computer? Now, many of you will simply say, sir, how? How can you conduct a business without knowing how to operate computers? My dear, look at micro enterprises. Do you think everybody who is operating in India, every manufacturer in India knows C++, knows Java, knows Python, etc.? Argument is simply no. In simple terms, bigger companies may have dedicated teams to take care of it. What about small manufacturers? Don't you think they do not have sufficient resources nor the knowledge regarding this? Now, what these companies will do, small manufacturers, what they will do is, they will simply outsource it. Right? Don't you think when they outsource it, they will have to pay money for it? And when they pay money for it, don't you think the burden of compliance increases? Any difficulty in understanding this? Right? So compliance is a concern. Multiple tax rates are there. We need to rationalize it. We need to reduce it. But frankly speaking, I don't think so. If you've read the newspaper, you will also know this. I don't think so government is making this as a priority right now. Right? Most of the experts have said this budget, which was announced recently, that was the most important budget. Right? Because the next year we have elections. Before the elections, this was the full-fledged budget of the government. And because government has not indicated anything, again, this is as per the current information. If the government decides tomorrow, right, we have to agree to that as well. There is no indication that government will make this as a priority right now. Maybe after the elections are over, they might look at it. Next, revenues. Revenue collected by the government on month-to-month basis, especially state governments. There is no stability especially in the last 2 to 3 years, because of the pandemic, revenues have been affected. All of you agree? The revenues of the central government as well as the state government have been affected. And finally, there is a list of the exempted goods, right? Best example, alcoholic products. We have to ensure that all these goods will be brought under GST. Because please understand the logic here. You cannot have GST parallel to GST. You cannot have other taxes as well. I hope you understand this. You cannot cover most of the goods and services under GST, but apart from GST also, you cannot have a separate tax on petrol. You cannot have a separate parallel tax on alcohol, etc., because that will defeat the whole purpose of indirect tax reform. Right? So these are certain concerns related to GST. Now, this is the end of the discussion of GST. Anybody has a concern regarding GST, let me know. Value of dollar increases, not the value of rupee fall. Again, we are discussing GST and you're asking me a question about external market, or let's say exchange rate. Reserve your questions. Whenever I take up external market, you can ask me a question. But I'll not deviate from this discussion. I'll not enter into exchange rate now. Any issues so far? So recently there was a news about merging NAA plus CCI. Has it happened? As far as I'm concerned, no, it has not happened. Explain revenue protection. Because of the pandemic, the amount of revenues under GST which were collected have been affected. And again, understand this, the states have been promised that over a period of time, GST will become very stable, economy will keep on growing, and when the economy grows, the GST collection should increase. The amount of revenue should also increase. Right? So that was the context wherein the states were made to agree to the GST. But in the last 2 years, especially thanks to pandemic, what has happened to revenue earnings of the states? There has been a disruption. When we discuss IMF, last class, we discuss IMF, monetary policy, right? International monetary policy. International monetary policy. What is this international monetary policy? I've never heard of international monetary policy. Okay. Any question related to GST? Can I go to the next one? Okay, let's start. Other important concepts regarding taxation. Other important concepts. Very, very important, very much relevant. One is a tax buoyancy. I'll number them. 2, 3, and 4. One is a tax buoyancy. Fourth one is a tax to GDP ratio. Let me connect both of them and explain. What do you mean by tax to GDP ratio? It basically represents total amount of tax revenue collected divided by GDP. It's a ratio of tax collection divided by GDP. For example, let's assume this year, I'll take simple numbers so that you understand. For the financial year, let's say 24, of course, financial 24 is the next year, don't worry. The government will be able to collect, let's say, 200 crore rupee taxes total. And the GDP, this is tax, and the GDP value for the financial year 24 turns out to be, I'll take a simple number, let's say 5,000 crore rupees. 5,000 crore rupees. So if I say tax to GDP ratio, what is the ratio here? Simple. 200 divided by 5,000 crore. 0000 cancel. 2 ones are 2, 25s are. If you want it to be converted into percentages, tax to GDP ratio is 4%. Now, understand this very carefully. What would you prefer? A low tax to GDP ratio? Think of it. It's easy. Just think of it. What would you prefer? A low tax to GDP ratio or a high tax to GDP ratio? Let me see how do you generally think. I will answer it, don't worry, but start answering. Which one would you prefer? A low tax to GDP ratio or a high tax to GDP ratio? Answer whether it is right or wrong. Think and answer. Right? I'll give you what is the right answer. High tax to GDP ratio. Your preference should be high tax to GDP ratio. Now, let me answer. Some of you are saying low tax to GDP ratio. Your thinking could be, sir, if it is a low tax to GDP ratio, it could be because the denominator is higher. If the denominator increases, automatically tax to GDP ratio becomes low, which means GDP is expanding. But you tell me, does it make any rational sense? In the sense, if GDP is increasing, which means market prices of all the goods and services is increasing, don't you think the taxes collected should also increase? I hope you understand. If your GDP is increasing, which means the market prices are increasing, people are earning more, consuming more, spending more, don't you think even the tax collections should increase? Does it make sense or not? So that's the reason you should not have a low tax to GDP ratio. You should always prefer a high tax to GDP ratio, which means most part of the economy you are able to impose a tax, you are able to collect a lot of taxes from the economy. And that is one point. Second very important point, government has to incur expenditure. All of you will agree with this? Whether it is a recession, whether it is slowdown, whether it is a growth, whatever it is, government has to incur expenditure. Now, don't you think if the tax to GDP ratio is low, means what? Government is collecting lower amount of revenue in the form of taxes, and if they want to spend more money, they will have to borrow more money then. Let me know whether I'm correct or not. If your tax to GDP ratio is low, government has to spend money, that's a fact. But to spend money, government needs money. If your tax collection is lower, will it not put a lot of pressure on the government to borrow more from the market? Is that preferable? Just think of it. You want the India to move towards that? Argument is no. So what is the conclusion then? Your tax to GDP ratio should be higher. Should be higher. Right? So generally in the context of India, the tax to GDP ratio is more than 10%. But if you talk about developed countries, the tax to GDP ratio is generally more than 20%. More than 20%. Which means India's tax to GDP ratio comparatively is on a lower level. It should be increased. It should be higher. Any doubts regarding the idea of a tax to GDP ratio, why it is important, etc., please do let me know. In this context, let me introduce one more terminology, the concept of tax buoyancy. Idea of a tax buoyancy. Important, understand this carefully. Many of you will be worried about the term buoyancy. All of you know Archimedes principle, buoyancy, right? That is basically floating, right? So understand the logic. Again, don't enter into physics here, right? Remain in economics. Argument is simple. From 1 year to next year, GDP will increase. Let's say from 1 year to next year, GDP will increase, which means there is growth rate in the economy. Now, along with the growth rate, don't you think the tax collection should also grow? Which means in the tax buoyancy, we are measuring, or it is the ratio of growth rate in the taxes. Growth rate in the taxes divided by growth rate in the GDP. Don't say fourth and one are both one and the same. Absolutely no. Both are slightly different. In the fourth, I'm simply comparing what is the tax collection divided by GDP number. In the first, I am making a comparison from last year to this year, how much percentage rise has happened in the taxes collection. And I'm comparing that with how much percentage change has taken place in the GDP as well. If I were to just give it in the form of a calculation, absolutely not required for UPSC. Let's say from financial year 23 to financial year 24, 2 financial years. The tax revenue collection is 100 crore in 23. It will become, let's say, 120 crore in 24. The GDP, let's say, was 2000 crore rupees in 23, will become 2200 crore in 24. One is a tax and the other one is GDP. Now, simple question to you people, how much percentage rise has been observed in terms of tax collection? 20%. All of you will agree? And how much percentage rise in the GDP? 10%. So if I basically calculate the tax buoyancy, it will be 20% divided by 10%, which is nothing but 2. Tax buoyancy is 2. Agreed? Any difficulty in the calculation? Simple calculations. Okay. tax buoyancy is 2. Now let me ask you a simple question. Would you prefer a higher tax buoyancy or a lower tax buoyancy? Just think of it. What would you prefer? A higher tax buoyancy or a lower tax buoyancy? Your answer should be higher tax buoyancy. Some of you are saying low. No, right? You should have a higher tax buoyancy. Again, the argument is simple, my dear. If the tax buoyancy is more than 1, what does it indicate? It indicates that amount of taxes or the growth in the taxes is much higher compared to the growth in the GDP. That is preferable. That is preferable. Again, don't say, sir, what if people are getting hurt, etc., etc. You don't know what is the distribution of the taxes. You don't know out of this how much is a direct taxes, how much is indirect taxes. That is not available to you. My simple question is, if the tax buoyancy is greater than 1, don't you think it simply means you are able to collect more and more taxes? I understand. You are able to collect more and more taxes. The growth rate in the taxes is much higher compared to what is the growth rate in the GDP. That is preferable. And now look at the next point. Is it okay if I say, if the tax buoyancy is greater than 1, generally the tax to GDP ratio will also be higher or it will increase? I'll repeat the statement. If the tax buoyancy is higher, let's say more than 1, generally it indicates that the tax to GDP ratio will also start increasing. Yes or no? Just think of it. It's basically an application part. Right? For example, if the tax buoyancy rather than 2, it becomes 3 for the same calculation. If it is 3 means what? From 100 crore, it has actually increased to 130 crore. If it is 130 crore, don't you think the tax to GDP ratio would be much higher? So higher the tax buoyancy, it will contribute to increased tax to GDP ratio. And that's actually preferable. Any difficulty with these two? Any difficulty with these two? 1 and 4. These are, right, 2 very important concepts. UPSC has been asking questions on this. Be very careful. Next one is, there is a concept of tax elasticity. Generally, students get confused between the tax buoyancy as well as the tax elasticity. Tax buoyancy, the taxes are increasing, that is the tax revenue collection is increasing as a result of higher GDP. Is it okay? Simple. GDP is increasing. As a result of that, you are able to collect more and more taxes. But when you say tax elasticity, in this case, the tax rate is changing, resulting into higher amount of tax revenue collection. Let me show it to you. Let me show you a very simple example. Imagine only one good is produced and sold in India. Simple calculation, understand it. Imagine in India, this is the only product manufactured and sold. Right now the GST rate is how much? 10%. So how much will be the taxes collected by the government? 10 rupee. All of you clear with this? 10% GST on 100 rupee product, 10 rupee is the tax collection. Assume only one product. Now, right, understand this carefully. What if the government will increase the tax rate from 10% to 15%? Tax rate is increased from 10% to 15%. What will happen to the taxes collected by the government? Taxes collected by the government will also increase. But please understand this carefully. This rise in the tax revenue collection is not because of change in the GDP. It is because of the change in the tax rate. Is it clear or not? Let me know. This rise in the taxes collected by the government is not because of change in the GDP, but there is a change in the tax rate. So whenever the taxes collected will change because of change in the tax rate, that measurement is called as tax elasticity. Measures the growth rate in the tax revenue collection as a response to changes in the tax rate. Okay, tax elasticity. And next one, third, tax expenditure. Right, important as well as misleading. Tax expenditure. What do you mean by tax expenditure? If I were to ask you, tell me what is tax expenditure, being the products of university, me as well as you will start defining tax expenditure like this. It is the expenditure that is incurred by the government because of collection of taxes. I'm pretty sure most of you would define like this. Even when I was a student, I used to define like this because that is how we have been taught. Tax expenditure means expenditure incurred to collect taxes, which is wrong. Absolutely wrong. Please be very careful. Tax expenditure simply means the amount of tax revenues which are foregone by the government. Foregone means what? Government should have collected the tax, but for various reasons, they will not be collecting this tax. Now, some of you will ask, sir, how? How is that possible? If government is supposed to collect the tax, they should collect the tax. Why are they not collecting that tax? Let me give you a very, very simple example. Imagine Government of India tells you, follow this carefully. Again, right, in real life, there is a policy called as Startup India. We'll discuss it later. Let's not get deviated. Let me give a very simple example. Imagine Government of India tells you, if you set up a manufacturing facility and start manufacturing this year, rather than 30% corporate tax, understand this, rather than 30% corporate tax, you will have to pay me only 5% corporate tax. It's an exemption that is provided to you. So have a look at this. Imagine you set up a company, you earn a profit of 100 crore. You earn a profit of 100 crore. Now, if there was no exemption that was provided to you, exemption means what? Certain reductions have been given to you. If there was no exemption provided to you, how much would be the taxes that you pay to the government? You will end up paying 30 crore rupee tax to the government. All of you will agree? You will end up paying 30 crore rupee in the form of taxes to government. But what has the government done? Government has reduced the tax rate applicable to you to 5%, which means rather than collecting 30 crore rupees from you, government will collect simply 5 crore rupees from you. Don't you think in this example, government has foregone means it has not collected 25 crore rupees worth of tax. Any difficulty, let me know. Right? Argument is simple. Annually, for example, take the recent announced budget. And if you have read the newspaper, if you have seen this, you will know this. Government of India has provided a tax expenditure of around 35,000 crore rupees for the next financial year. Why? Government has given tax exemptions to many taxpayers in the market. And when such tax reductions or tax exemptions are provided, government, rather than collecting certain amount of tax, will end up collecting lower amount of tax. So the difference between that is called as a tax expenditure. Right? So this is the concept of tax expenditure. All the four are clear to you? All the four are clear to you. Tax buoyancy, tax elasticity, tax expenditure, and finally, right, the tax to GDP ratio. Now, what are the issues in the taxation system? We are at the fag end of the discussion on taxation. What are the issues in the taxation system? Let's go one by one. One, revenue losses are a concern. Lot of tax avoidance happens in India, and lot of tax evasion also happens in India. Now, many of you will ask, sir, we have discussed avoidance. What is the meaning of evasion? Evasion also refers to action of a taxpayer which leads to reduced tax payment. Simple, reduced tax payment. Now, many of you will simply say, sir, it is avoidance then. Only difference is avoidance is not illegal. I hope you understand this. Avoidance is not illegal. Evasion generally is illegal. For example, imagine you're a tax, let's say commercial or let's say a tax inspector. I will come to you and I'll simply say, sir, here is 5 crore rupees tax. And you will ask me, sir, why? Why are you paying 5 crore rupees? My answer to you will be, last month I sold cocaine worth 100 crore rupees. So out of that, I'm paying 5 crore rupees to you. And you will simply say, thank you, sir. Dhanyavadamulu, right? Please come and sit. right? Then you will basically call up the police, right? Put me behind the bars, go to my home, search the whole home, right? So understand the logic here. What I'm trying to say is simply this: people either through legal methods or illegal methods generate a lot of revenue, but when they're supposed to disclose the revenue, they will not disclose it to government. I hope you understand this. Don't say tax avoidance and evasion both are one and the same. Absolutely no. In avoidance, you disclose the revenue to the government, but what you're doing, you're using certain loopholes in the system to reduce the tax liability. But in case of tax evasion, you do not even disclose how much is your actual income to the government. For example, underline the term, if I'm involved in the drug trade, if I'm involved in, let's say, kidnapping of the people, etc., I will not disclose my source of information to the government. I will not tell what is my income to the government. I'll never do that. Does it mean that tax evasion is always associated with illegal activities? Of course no. For example, imagine I'm involved in the real estate activities. This year, my actual income is 10 crore rupees. But when it is a question of paying the taxes to government of India, I'll simply disclose my income as 50 lakh rupees. Right now, many of you will simply say, sir, how is that possible? If you are a real estate agent or you are involved in the real estate, government should come to know. Not necessarily. What if the transactions that I've conducted are involving black money? What large amount of transactions that I've conducted or been involved in is a cash transaction? Because there is no paperwork, because there is no paper trail like this, government will never be able to come to know how much is my source or how much is my income and what is my source of income. And can I undercoat my income? Can I basically give a very, very low number to the government, evade taxes? Answer is yes, by the way. Right? So tax evasion as well as the tax avoidance, both are adding to the lower amount of taxes collected by the government. Most of the economy is not covered under taxation, right? Meaning what? Most of the economy is informal in nature. For example, once let's say the class is over, evening 8 o'clock, you will keep on scolding me, cursing me, right? Because economics is difficult, and you go to have a tea. Don't you think when you purchase a tea, right, on the roadside, from the roadside vendor, you are no doubt purchasing a service or a good. You're paying money for it. But do you check whether the vendor is registered, whether the vendor is paying taxes, etc., etc., etc.? Right? So most of the economy is informal, hence collection of taxes is also affected by this. Government provides a tax exemption to many companies. As a result of this, the amount of tax expenditure is higher, which reduces the amount of tax revenue collection. And issues related to GST, right, that is also one of the issues that is plaguing the taxation structure in the Indian economy. So far, so good? Any doubts so far? Now, what are the reforms? Right? What reforms have been implemented by the government? Or before that, I'll discuss reforms after the break. Let me discuss one concept, then we'll take the break. Some of you are asking for a break. We'll take the break after this concept. Now, the concept name is simple, Laffer curve. Right? The idea of a Laffer curve. Right? Have a look at this very carefully. In the Laffer curve, along the x-axis, I will represent the rate of taxation or the tax rate. And along the y-axis, I'll represent government revenues. What does the Laffer curve state? It states that as the tax rates will start increasing, the amount of government revenues will also increase, but not till perpetuity, not always. After a certain time period, if you increase the tax rate, tax revenues rather than increasing will start decreasing. Is it okay? I'm giving you the statement, then I'll give you explanation. What does the Laffer curve state? With the rise in the tax rate, the amount of taxes collected by the government will also start increasing. But not till perpetuity, not always. After a certain time period, if you further increase the tax rate, then rather than increasing, the tax receipts of the government will actually fall down. And that is the representation which is called as a Laffer curve. Now let me give you explanation. What is the explanation? First part of the statement, with the increase in the tax rate, tax receipts or the tax income of the government will increase. Is it okay? Imagine right now the tax rate is 0%. If the tax rate is increased from 0% to 5%, will the government collect more amount of taxes? Yes. From 5% to 10%, will the government collection of taxes increase? Answer is yes. But what this theory says is, imagine you have reached a certain tax rate, and please be very careful, this tax rate is not defined by Arthur Laffer. Arthur Laffer is the name of the economist here. Mr. Laffer has given the theory, but he has not defined what is this actual tax rate. Meaning, you should not be coming to a conclusion because this is exactly in the middle of the line. Don't come to a conclusion it is 50% always. Absolutely no, it could be 33%, it could be 22%, it could be even 18%. But the fact of the matter is simple. You will never be able to find out what is the actual tax rate they are talking about here. It is just a theory. It has flaws. I'll make you understand in a minute. What it simply says is, understand this. After certain tax rate, let's imagine, I'll just take a simple number here. Imagine this tax rate is 33%. Meaning what? If the government increases from 0% to 10%, taxes increases. 10% to 20%, tax collection increases. 20% to 30%, tax collection increases. And 33%, tax collection increases. This is first part of the theory. Second part says, if the government further increases it beyond 33%, let's say from 33%, the tax rate is made 40%. As per this theory, the receipts, so that is the tax income of the government, will not increase. Rather, it will basically start falling down. This is the highest level of income. And after you have shifted from 33 to 40%, the tax revenues of the government will fall down. This is basically what is given under the Laffer curve. Is it okay? This is what is provided under the concept of Laffer curve. The question arises, why? Why is that after certain level, again I'm using the generic term, after certain level, because I'll repeat it, the theory doesn't say what is this tax rate. Is it 33? There is no proof of it. Is it 42? There is no proof of it. Is it 30%? Again, no proof of it. What this simply theory says is, whenever you start increasing beyond this optimal tax rate, people will start to replace work with leisure. Right? Have a look at this. It says, people will start replacing work with leisure. What do you mean by work with leisure? Simple. Rather than working more and more, people will basically start taking more leaves. People will start taking more and more rest. Aram se they'll sit rather than working more. Why? The theory says that with a higher tax rate, people will start feeling the burden of tax. And the people will simply say, rather than working more and paying more taxes to government, why don't I take more rest? I understand. If I work more, I'll have to pay more taxes to government rather than take rest. Less work, less taxes to government. In fact, look at the highest point here. That is extreme point. Right? One means 100% tax rate. If government imposes 100% tax rate, which means whatever you have earned, you'll have to give it to government. Will you even work? Just think of it. If you are earning 100 and you'll have to give all the 100 rupees to the government, why will you even work? That is the reason when the tax rate is 100%, theoretically, government revenue should be very, very high. But what is the government revenues at 100%? 0 rupees. Right? That is basically the application of Laffer curve. Again, please understand, it's just a theory. Reality is not like this. I hope you understand. Reality is not like this. There are problems with theory here. Now, some of you are asking, why should I learn it then? My dear, because UPSC has asked questions on it. Right? Suddenly, UPSC will throw a question on this. right? You will start, right, scolding me in the examination hall. So argument is simple here. Higher tax rate, more tax amount. But after certain tax rate, tax revenues will not increase but reduce, because people will start replacing work with leisure. That is, rather than working more, they will take more rest, paying lower taxes to government, right? And again, this is applicable? Absolutely no. This is not applicable in real life. Why? Is it okay if I say that the amount of taxes collected by the government is affected by various other factors apart from the tax rate? Just think of it. The amount of taxes collected by the government, that is the tax revenue collected by the government, it is affected by various other factors apart from tax rate. Is it the only tax rate which will determine how much revenue you are going to collect? For example, imagine Government of India increase the tax rate in 2021 to 35%. Does it mean that in 2021 government collected more taxes? How many of you think government will collect more taxes if it was 35% in 2021? You will be wrong. Why? Look at the year. Look at the year, you will understand it. So there are various external factors, internal factors, which will have an impact on the tax receipts of the government, tax income of the government, not just the tax rate. And second biggest flaw related to the concept of a Laffer curve is, what is this optimal tax rate? What rate should be followed by the countries? Any formula for this? Absolutely no. Now, don't you think if that was the number that was given or a formula was given, every country would have decided that would be their tax rate? Right? Is the logic okay with you? If the formula was given under this, every country would have used the formula and decided, okay, let me keep this itself as a tax rate, because the theory says I will collect the highest amount of tax receipts under this. So that is the reason, right? So it's just a theory. It's just a theory. Right? Just understand this. Okay. Now, let's take a break. Let's take a break. Before that, let me take up certain questions from your side. Some shops like jewelry give handwritten bill instead of computer generated. Will it mean they are evading tax? Yes. You should never accept a written bill in the shops. That's the reason even Government of India says don't collect those bills. They are of no use to you. Anybody can write in a piece of paper and give it to you. As long as the GST registration number is there, as long as it is computer generated, these are not authenticated bills. But now the input tax credit is not in practice anymore, so it will be the same as in pre-GST. Who said there is no input tax credit? Nitika, right? What is the source? Where did you read that there is no input tax credit provided now? Please let me know. Okay. Laffer curve applicable to both indirect and direct taxes. This was discussed in the context of direct taxes, that is specifically income only. Okay, any doubts? Any doubts apart from this? Has NAS stopped working? As far as I know, no. It is yet to be merged with Competition Commission of India. Sir, even if I buy a small product, they will also add a tax on that. Yes, any product that you purchase from the market, tax is one of the components of the market prices. Sir, why should we not procure from those not registered under GST? If they are not registered, what is the guarantee that the taxes that you have paid, they will give it to government? For example, you have purchased raw material from me, you have paid GST. What is the guarantee that I've given that 10 rupee GST to the government? And I hope you understand the implication of it. If I don't pay 10 rupees to the government, how can you claim input tax credit? Okay. Okay, let's take a break now. Let's take a break. We'll restart at 6:05. Sir, give me 9 minutes break. Right? No, not 9 minutes. Right? Enjoy. I'll give you 20 minutes break. I'll start at 6:05. 6:05 p.m. by the way. Okay? I take a break. I'll meet you at 6:05.